Hello and welcome to my real estate education series of videos. My name is Paul Giantonio and I'm a broker, associate, and director of marketing and sales at ERA Statewide Realty. Today I want to speak to you about your loss of purchasing power with every day you delay your home purchase. Before I get started, let me tell you a little bit about me. I'm a full-time realtor and I've been so since 1987. I specialize in selling residential real estate in the central New Jersey region. I founded ERA American Dream Realtors in 1991, and then in 2006 I merged with ERA Statewide Realty to better serve our clients. Today, I manage and supervise the entire resale sales team of our multi-office organization, and I've been a resident of Somerset County, New Jersey for the past 35 years. Now, let's get back to the loss of your purchasing power. Today, I'm going to talk about what is happening with mortgage rates and also look at home price appreciation. I'm doing this because I've been hearing more and more people talk about holding off on buying with the anticipation or hope that prices will be going down and their expectation of buying at a lower price. So let's get started. What we're looking at here is the 2022 mortgage rate projections from a number of real estate industry experts. Freddie Mac, Fannie Mae, the Mortgage Bankers Association, and the National Association of Realtors. As you can see on the top line, 2022 first quarter, the projections were between 3.2% and 3.4%, or an average of 3.3%. Well, as I record this video in March of 2022, mortgage rates have already surpassed those projections and stand between 4 and 0.175 and 4.25. So that's between 4 1/8 and 4.25%, and they're heading higher. Why are the projections off? Well, at the time these projections were made, our current 40-year high inflation rate was said to be transitory due to the pandemic. Now the Feds have said that the inflation may not be so transitory. Also, the war in the Ukraine has driven the oil markets higher, which will place even more inflation pressure onto the economy. So let's look at what rising interest rates or rising mortgage rates mean to you. Okay, what we're looking at here with mortgage rates this chart I want to draw your attention to the bottom left. In the green margin, you'll see 3.75 rate. The next column shows a principal and interest payment on a $400,000 loan of $1,852. I've highlighted those two numbers for you. Now, in the next slide, I've highlighted the numbers representing just a 0.75% or 0.75% increase in the mortgage rates. That would bring the rate up to 4.50%. Moving right on the chart to find a payment that's close to the 1852 that you saw in the beginning, you'll see that I've highlighted 1874. In order to keep your payment near the 1852 per month, the amount of the loan would have to be 7.5%, as shown at the bottom line of that chart, bringing the loan amount down to $370,000 with a payment of $1,874 per month. Make no mistake, rates are going to be moving higher. Now, let's look at home prices. This chart shows the experts' projections of home price appreciation as they were expected in 2022. As you can see that the numbers range from anywhere from 2.8% to 7.4%. Again, these projections were made at the end of 2021. The expectation was that there would be more housing inventory coming on the market, thereby easing the upward pressure of home prices. Well, 2.5 months into 2022, finds that inventory is not expanding as expected, and in many areas there are fewer homes on the market than there were in November and December of 2021. Buyer demand, well, it's still strong, and that in spite of the higher interest rates, there are still more buyers than available inventory, leading to continued bidding wars for homes and still driving home prices higher. So, in summary, interest rates are rising at the same time housing prices continue to rise. All this means is that your monthly payment is going to be higher when you attempt to borrow the same amount you wanted to borrow today. Buyers are limited, though, by the amount of monthly payment that they can afford, as was so demonstrated. The amount you can borrow will be less at the time home prices are increasing, forcing the buyer to have to settle for less. Now, if you gain only one thing from this video, please let it be this. With the cost of everything else in the world increasing, keep in mind it's not the price of the home that matters. It's the amount of the monthly payment that you have to live with. Thanks for watching. Hope this helped. Please feel free to contact me with any additional questions at any of the options below. You'll see my office direct line. You have my mobile number. You can text or call. And also there's my email address. If you would like to see any of the other videos in my real estate education series, please go to my website at paulgsellshomes.com or virtualpaulg.com and click on the questions answered link in the blue banner at the top of the page. Again, thanks for watching, and may every one of your real estate experiences be positive ones.